Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is David Toupin. Thanks for being on the show, David.
Yeah, man. Appreciate you having me here.
David primarily focuses on, primarily targets value-add multifamily real estate opportunities to purchase and improve and hold long-term for cash flow and appreciation. He works with qualified and accredited high net worth investors, family offices, and institutional capital sources to provide strong returns for their invested capital. He has a proven track record and successful real estate deals, having purchased and currently managing a portfolio of nearly $10 million in commercial and multifamily real estate properties. David, thanks again for being on the show today, and tell the listeners a little more about your background. And I think we're going to get into some more details about your background, how you got started, but give us a brief intro of how you got into real estate.
Yeah, man. Thanks again for having me here. So I started, I guess my whole entrepreneurial journey started when I was 13 years old. I started a landscaping business, and I've always wanted to own my own business and work for myself. I think a lot of entrepreneurs start that way with some form of landscaping, and I did that through high school, sold that business off. And then I got into college. I had some experience, did some pretty hardcore internships at some investment banking firms, and did some consulting with a Big Four firm. And interesting enough, the last day is my junior year in college, and the last day I was interning at a company called Deloitte. And the day after I got out, I ended up turning down a couple job offers I had that were probably pretty close to six-figure job offers. And I turned them all down, and I said, hey, I'm going out on my own, and I want to go into real estate. I'd been listening to podcasts, reading books like crazy for a while. I'd got my real estate license, and I wanted to get into flipping homes and, wholesaling, flipping, all that stuff that I think a lot of people really start off reading about when you're looking into real estate. And so I got in, I found a mentor pretty quickly. I did some wholesaling, some flipping for a while. And then I think my first goal I ever wrote down, I write down my goals a lot. It was like, I want to own 10 units by the time I'm 25. I think that was it. And after I had done about 6 months of flipping, wholesaling, kind of going into my senior year in college, started getting into multifamily. And before syndication was really, I guess, a buzz term. This is like 2016, and now it's really like a buzzword that people talk about a lot. I was like, how can I go out and buy bigger properties, earn some passive income when I don't have any money? So I didn't when I started. So how can I go out and do that? So I just thought, I talked to a couple people, they mentioned this, syndication or, using the Regulation D to raise money, and put a couple of 12-unit deals together. They're on the same block. So I bought 2 12 units about a block or two away from each other, syndicated those. And then a couple months later, this is in 2017, right before I graduated college last December, I closed on a 96-unit building. And then shortly after, a couple months later, I did a commercial deal. So still focusing a lot on multifamily. Got a little slowed down this year with a commercial deal I've been working on, but I'm under contract on another multifamily property right now, and just looking to grow that portfolio.
Wow. You are making it happen. It's very impressive. And, I'd like to hear a little more about, you turned down these big job offers, right? I mean, you were that committed to the real estate, and pursuing this. And obviously I'm sure now you're glad you did, but at the time, how did you have the confidence to do that? How did you know you were educated enough? How did you know that was the right decision at the time?
Yeah, it was scary. I mean, there was no indication that I was going to be successful at all and going out into real estate. I had no background in it. I hadn't made $1 in real estate yet. I just listened to a lot of podcasts and books and was really inspired. Listening to like Grant Cardone and Bigger Pockets and all these guys. for me, it was, a lot of people thought I was a little crazy to do it too. So you go from the potential of making pretty good money to nothing at first. And for me, it's just I knew I had really big goals and I wasn't going to get there working for someone else. I think was just the biggest driver for me. Might as well start now while I'm young.
Yeah. So what did you do next to really pursue? I know you started flipping homes, but how did you make that happen with no experience in real estate? Because I know a lot of the listeners are in those same shoes. It's
Sure.
like they really want to pull the trigger and make that happen, but it's like, I don't.
Mm-hmm.
They're hearing all the naysayers too, right?
Sure.
Just all the people that are saying no. You need to go take that job, or it's more secure. So what do you say to that?
Absolutely. Yeah. So I think the biggest thing, especially for a lot of young folks out there listening, is finding a mentor or finding someone that can help accelerate that growth. If you can provide enough value, then it makes sense. So I latched onto a guy who was probably flipping about 60 to 100 houses a year. He'd been doing it for a long time, and I was his acquisitions guy. So he taught me how to wholesale, how to flip houses. He just had an insane system for it. And I latched onto him. Initially, I was working with him, and then we partnered on those 12 units. So, for me, I think the advice I would give to anyone is network. You always hear your network is your net worth, and I think it's really true. If you guys want to level up what you're doing, really choose and be selective of the people you're hanging out with. I lived. It's funny. I came from living in a fraternity house in college to living with some buddies in an apartment. And then I moved right back home with my parents up until actually like 6 months ago because I knew I needed to eliminate all distractions for me when I was starting my business. So I moved out of that. I changed the circle of people I was hanging out with to all real estate people that were much more successful than I was. And it really, I guess I can't describe exactly how it happened. It just kind of happened. You put yourself around those people and it really accelerates you, in my opinion.
So how did you find those groups of people? Because I know lots of people are probably asking that question. Well, how do I do that? How do I do that, David? How did you find those groups and get connected?
Yeah, great question. So I started going to a lot of like RIAs and local meetups, networking groups. Nowadays, you guys can go to like Rod Cleef. I don't know if you know Rod Cleef. Well, obviously you do. You're in the mastermind as well. He hosts seminars. There are a couple other guys out there that host these seminars, and those are awesome opportunities to network with people and find other successful investors and really latch on to people that are doing it. You can even go on Google and look up who owns apartments in your town, the bigger apartment owners, and go into their office or give them a call and just say, hey, I'm young, I want to learn. They might even hire you to analyze deals for them or be an acquisitions person. There's a lot of opportunities out there. Even working for more corporate style real estate investment companies that may own 5,000, 6,000, 7,000 units, maybe a family company. But a lot of those groups I've networked with as well. And you guys can just find those by Googling them or looking at local meetups.
So, David, would you recommend that someone start in flipping before they do syndication like you did or not? Or what would you recommend?
No, not anymore. No, that was a segue for me because I didn't really know any better. But if you guys if anyone out there is listening and you're trying to get started and you already know about multifamily syndication, commercial real estate, I would say go right for commercial. There's a lot more money in it, a lot more opportunity.
Great. So let's move. You went from the 2 12-unit deals right into the 96-unit deal. All right. And so it's incredible. So, tell us about, I know you said you had the partner, your mentor was a partner on the 12 unit. And then tell us how you transitioned, or the 2 12 units. Tell us how you transitioned from that to the 96 unit. Yeah.
So went into that deal. Actually, it was interesting. I sent a round of mailers out, and we sent a bunch of, it was just a very basic, I see you own this apartment building here. I'm interested in buying. If you're willing to sell, give me a call. So this old guy, I think he's like 71 years old. He lives in Metro Detroit here in Michigan, and he owns a little over $1 billion in real estate. And the guy gave me a call. Interestingly enough, he lives in Michigan, but he's got a place in Miami. He called me from Miami, and there was no reason he should have sold me the property for the price he did. But I think in the end it came down to the relationship, and he liked me, and he kind of saw a little bit of himself in me when he was younger and started out. And he ended up, we put the property in a contract for $4.2 million. I think it was $44,000 a door. Now today, that was a year ago, almost exactly a year ago. Today, if he would have held it and sold it, he probably could have sold it for $60,000 a door as is without touching it. So he left probably $500,000 to $1 million on the table. When we closed, I sat down and got lunch with him. I said, "Hey, why'd you sell it to me?" He told me, he said, "I didn't need the extra couple $100,000. I just liked you." And to me, that was like, man, this guy threw me a bone. I don't know if it was luck or if it was what it was, but it worked out, and it was just kind of the right place at the right time type of deal. So that's how I found it. And then we took it down. We raised $1.7 million. I had to bring in a sponsor, of course, because I can't get the debt on my own. So I brought in a sponsor. We raised the money, and now we're kind of finishing the execution of our whole value add plan right now. So
tell us how you raised capital for this deal. Since you're just getting started, and I know it's your second syndication at this point, but tell us how you met the investors, how you raised capital.
Yeah, so a lot of it starts like friends and family, and less family, more friends. So most of it was just I had been networking after we raised some money on those 12 units, just networking, some referrals from those same people that had put in the money on the earlier deals. Like I said, I go to a lot of events. I'm always networking with people and building a list of investors, and it certainly was not easy. So we had I think $750,000 in commitments drop out the week before $100,000 went hard on the deal. And what I had to do was I brought in another sponsor. So there's three of us on the deal, and we gave him a small piece of the GP equity, and he signed on a loan as well. And he ended up bringing that $750,000 to the table for a small piece of the GP. So that's how we got it done. But I can tell you, the money, I would never count a commitment until the check is in your hand, or in the bank actually deposited, because I've seen it happen firsthand that, somebody's commitment means nothing until the money's actually there. So
yeah, unless it's cash in your hand, which I wouldn't recommend.
Yeah. I don't recommend a bag of cash.
Yeah, I wouldn't count it until it's in the bank. That's right.
So,
are you tired of answering emails from investors about when they'll receive their K-1s? Let the real estate CPA handle the accounting and taxes on your next syndication, and they'll file your tax returns by March 15th so you can get your K-1s to your investors by the individual filing deadline on April 15th. Not only will this reduce headaches, but it will help you retain investors over the long term by improving investor experience. The Real Estate CPA is now offering a special virtual workshop to the listeners of the Real Estate Syndication Show on how to answer tax-related questions from your investors. Learn more today by visiting therealestatecpa.com/syndication. So it wasn't easy. You had these people drop out. I know that was some stressful times right there, some sleepless nights. So but you found a way to make it happen. And that's what I really like, is that it wasn't just over with. And just like, it didn't happen. We don't know what to do now. No, you still found a way to make this deal happen. So tell us now about, going forward. What's the plan? What are you executing on this deal now?
Yeah, so we raised $500,000 to do, I think we're going to renovate 50% of the units, like 40 to 45 units. And the rents were it was 50% of the units were one bedrooms, 800 square foot one bedrooms, and there were 1,000 square foot two bedrooms. That was the other half, 48 units and 48 units. So the one bedrooms were at $650 on average. The two bedrooms were at $750. We're now getting the one bedrooms up minimum of $150 to $800 without barely doing anything. We're doing like paint and carpet, and if we renovate them, we're getting up to $850. And then the two bedrooms, I I had an on-site manager. As I mentioned to you before, I live on the property. Actually, I moved in because I really wanted to learn management. So I took one of the units and I kind of tricked it out, and I get to really oversee the management. I had an on-site manager quit on me over the summer, and I stepped in for about a month and a half, and I was leasing units myself and all that. And I leased one of the 2 bedrooms from $750 up to $1,175. Renovated one. So we put, is that a $400 $750, that's $425 increase. And I think we put like $5,000 into that unit. So it's almost like an 80 or 90% return on equity for that build. But they were so far, so it was just mismanaged. I think the owner's nephew was managing it. He just threw the guy in place to do the work, and it just rents weren't being increased, a lot of month to month, expenses weren't being watched. So it's been good so far, to say the least.
Cool. So I meant to ask you about the letters you sent out. How many letters did you send out?
I haven't done them in a while. That was actually the last round I sent out. But I sent out like 500 of them. Just a list from CoStar.
Awesome. And then how many responses would you say you received?
I would probably get at first I was getting like 4 to 5 responses a month. And then I stopped getting responses for a couple. I sent a couple after that one actually, and I just stopped getting any responses. So I stopped sending them. I probably should have just kept mailing them, but I had not. I need to start that back up.
So what did your letter look like? What was your tricks to get it open, to get it read?
I honestly did not put a ton of effort into making it like personalized. It was just a standard white envelope, a printed label, and the letter was just very basic corporate, letterhead. If you're interested in selling, I'm interested in buying, give me a call. Cool. So it was very simple. Yeah.
Awesome. So, back to this plan. So, what's your plan on holding the property? What's the exit plan? What are you looking at in the future?
Yeah. So I guess the investment structure, we gave the investors an 8% preferred return. And then there's a 70-30 split over that. So any income over the 8% every year, 70% goes to investors, 30% comes to our management team. Our goal is at year 5, add enough value so that we can refi, get investors 100% of their capital back, which I think we'll probably achieve by year 3, looking at where we're at right now. And then once we get investors 100% of their capital back, preferred return drops off, and our split goes from 70-30 to 50-50. So we'll, at that point, management team gets 50% of the net income every year. So, and then it'll be a long-term hold after that.
Nice. So investors are okay with that, or I just wondered, what did investors say about that, or what were their questions as far as presenting how that waterfall?
Sure.
Like that?
Yeah. So I guess I could give a couple tips from the seminars that I received on that one. So I started off with a more aggressive structure, just my naivete and not really understanding the business as well. I think my first structure was like a 65-35 split, and it was really weird. Like a portion of the returns would go towards paying down their capital, and it was just not well received. I tried to get investors in the deal by sending them a Dropbox link, and I had like the underwriting model and some other documents. Don't ever do that. Put together a really nice looking brochure PDF with some pictures, some numbers, overview, summary. I lost a lot of people. I guarantee I lost a lot of people because I didn't have the right type of presentation front. So that was another learning experience for me. Investors' feedback overall, I mean, it's been great since we closed. We got them 10% return on their money in the first quarter. So, and since then, it's been consistent. So
tell us how you improved your presentation now. Like, give us some pointers on really improving our presentation to investors.
Yeah, absolutely. So now I put together a investment offering. It's a PDF. I started off, it's got a nice picture of the property, the name of the property, and then I dive pretty quickly on the second page into what the structure and returns are going to look like, and a couple of quick points about the deal. And then I'll get into track record, experience, all that, renovation budget kind of later on. So I think, when you're talking to investors, what's really important is that they trust you and that they trust that you know what you're talking about. They can look at numbers all day, but I mean, even people that are just getting started in this business have analyzed a couple deals. I could show them a 150 unit deal, the numbers on it, and they're not really going to know exactly what's going on. So you can't expect a physician who's a accredited investor and has the ability to put $100,000 in your deal to look at a spreadsheet or some numbers and understand what $55,000 a door in Dallas Metro means. You know, they're not going to know that. So when it comes down to the wire, they're going to invest because of you. In my opinion, that's 90% of it. So if you can put together a nice looking presentation, the property looks good, it's not a dump, it's in a good market, it's got some story behind it where you can say, hey, we're going to renovate the units, get the rents up X amount, we're going to buy it for 4.2, put $1 million into it, sell it for 7. I mean, there's some story there, easy to explain. You keep it simple. You're not going to have too hard of a time raising capital, in my opinion. So especially if you're getting referrals, and especially if people can tell that you have a track record. So
how are you tracking that? Are you using some system like MailChimp or some other type of CRM?
Actually, just today I pulled the trigger on a CRM. My good friend Jacob Blackett, I'll give him a plug. Their company's called Syndication Pro, and it's kind of like a startup. Well, I don't want to say startup, but I think they just finished it this year. So, you know, he's a friend of mine. I'd rather put my money with him than with another one of these CRMs. His seems great so far. I'm in the implementation phase. So by January 1st, we'll have it up and running, and I'll be done with using Excel sheets to track investors.
Nice.
So,
Yeah, we've had Sterling on the show, and we've talked about Syndication Pro a little bit.
Oh, okay.
Yeah,
cool.
That's great.
Yeah, they're good. They're good guys.
Yeah, great guys.
For sure.
Great guys. And so, you know, tell us, you know, David, what do you tell somebody that says, you know, David, I really want to get into the syndication business. What's the most important thing? You know, you got 30 seconds to speak to them. What do you tell them?
Yeah, I'd say number one, do you have money? If you have money and you're able to invest in a deal first passively, and ask the person you're investing with to teach you along the way. Say, hey, I want to invest $100,000, but I want to come out to the property, tour it with you. And you know, would you, allow me to work with you a little bit to break down how this process works? So learn how it works, learn the systems. If you don't have money, find people who do. That's kind of one of the first steps. And then spend 80% of your time looking for a deal. I think a lot of people get caught up in, the logo and the name of your company really don't matter until you have a deal under contract. So you should be spending 80 to 90% of your time looking for a deal, and 10% of your time looking for, I used to say looking for investors, but on your first deal, look for somebody who already has investors and that can raise the money. So come to someone like myself or yourself who can easily raise a couple $1 million and just spend your time finding a deal. The money's out there. If you find a 300 unit deal right now and you brought it to me, we can get that closed within 60 days. The money's not going to be a hard raise. So all you need to focus on is finding the deal. And that's what I would say to most people.
I agree. And can I ask how old you are, David?
I'm 23.
23. I want the listeners to really think about that. So age does not, it's not an excuse, right?
It does not.
It's so impressive, what you've made happen, David, and just the mindset that you had to have, to accomplish what you have. And anyway, congratulations to you. That's awesome.
Appreciate that.
So, what's been the hardest part of the syndication journey or process for you?
I think definitely at first is raising money. And right now it's finding deals. I put out 8 LOIs this week. I'm consistently putting out at least 3 or 4 a week. And I've got a team now that's helping me analyze deals and prospect. So it's definitely difficult to find projects, but we're finding them. You just have to put the work in. So I think right now that's a tough part. And then just understanding that you're not going to get rich overnight in syndicating. Anyone who wants to get into it, I would say mentally prepare yourself for at least 5 to 10 years, because you're just not going to get rich overnight. You're a lot of times you're putting together a heavy value add deal, or even a kind of a mid value add deal. There are no returns to investors in the first year a lot of times, or you're just hitting that preferred return. So don't expect to be, creating a ton of passive income for yourself right off the bat. unless you're investing back into the deal as well. So, I would say definitely finding deals right now is the hardest part, but we're finding them.
Obviously, I'm going to ask, how are you overcoming that? What are a couple of things you're doing to find deals or increase your deal flow?
Yeah. So I have personally recently hired a guy I taught him how to analyze deals, which was kind of my big strength before. But then I realized I'm spending so much time analyzing, I'm not looking at enough. So I hired him. He fills out the analyzer and does all that, and then sends it to me for final review. I now can spend more time talking to brokers, going out and finding deals, and doing what the best use of my time is. So that's kind of one way I've overcome it.
Nice. So yeah. What's some way that you've recently improved your business that we can all apply to ours?
Improved my business. So I guess if you already have a track record and you're in this and syndicating deals, definitely an investor CRM I think is huge. That's one thing. If you're just getting started, you need a deal analyzer, and you need to learn how to run numbers on multifamily deals. I think people undervalue the importance of that. Because there's not a single way that you can go through and buy a multifamily deal, no matter what size, where you don't need to understand the numbers. Whether it's pitching an investor or pitching, trying to get a loan from a bank, to trying to find a partner to raise money for you, you need to understand the numbers and know how the financials of a property work. And I think that is just paramount importance. So anyone getting into this business, get a deal analyzer and start running numbers on properties.
Awesome. So before we have to go, David, what's the number one thing that's contributed to your success?
Networking. Networking is number one thing. Yeah. Finding people who are where you want to be and latching on, providing value to them.
I think that's great advice. Great advice. And so, David, tell the listeners how they can learn more about you and your business. And also, you and I talked before the show about the analyzer that you created, and tell us a little about it also.
Yeah. So I have made this, I'm super analytical, and I came from, some kind of corporate investment banking jobs where you literally live on Excel for 12 hours a day. So I got really good at it, and I built some pretty powerful multifamily analyzer over the past couple of years, and it's just purpose built for syndications. You can do all the preferred returns and splits. You can, say what do the returns look like if I refi at year 3 and sell at year 7 or sell at year 5. I mean, there's just so many cool aspects to it. So you guys can reach out to me if you're interested in that, or you just want to connect at david@obsidiancapitalco.com. That's my business, Obsidian Capital, and that's spelled OBSIDIAN capitalco.com.
Awesome. And also about your Facebook group.
Yeah, Facebook group. So I run this Facebook group with a guy named Kevin Easterly, if anyone knows him. And it's called 10X Apartment Investing and Franchise Mastery. We mainly talk about apartments, but also my buddy Kevin, who I run it with, is really big into franchises. So talk a little bit about that too, but it's just a super motivational group. We've got 450 people within the last 30 days. I think we started it like a month and a half ago. So 450 people in it already. And it's awesome group of people. We're just really trying to get people pumped up and educated on how to get into apartment investing. So anyone that's interested, look me up on Facebook, just David Toupin, and feel free to shoot me a message or hit me up.
Thank you so much, David. I appreciate your time and you being on the show and providing so much great content for the listeners. And I hope the listeners will connect with me at lifebridgecapital.com. And you also go to our Facebook group where we can all learn from experts like David, and we can all grow our businesses together. We will talk to you, the listeners, tomorrow.
Thanks, man.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.